Baffled by my momentum settings. My momentum settings are actually just the standard momentum. They're the 3 or 4 rows, depending upon the um, depending upon the probe and rotation. I typically will use just a standard momentum setting, with the 3 um, um, the 3 rows. Sometimes I'll customize it, but typically use just the standard momentum setting. See if I can show you that here. Yeah, just the 3 rows. This is pretty standard. I'm looking for strong, 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 buying momentum, selling momentum, strong, 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 negative to weak. That's my setting on the momentum map. So we are at a intersection here. I would call this an intersection of information and knowledge. And this is where we are in the overall process, not just where we are in the course, but I consider learning a process. And in the process of learning, typically what happens is you get information. Even if you're experiencing something or you're watching something, you are part of the process and your information is very tangible. You are, in fact, getting information. So as we learn, we first get information, and then we look to move that into knowledge through practical application. So that's where we are after 2 days, and there's a strong likelihood that some people believe that they are drinking from a fire hose in terms of that information, and I totally get that. You've received a significant amount of information in the last 2 days. Even this morning, I've taken a bunch of that information and crammed it into an actual moving auction. And if you were what you're trying to do in your mind is you're trying to recall everything that I've talked about, and a few things are catching where you're going, oh yeah, okay, yeah, I understand why we came up and tagged VPOC and why that would be your target. Okay, I understand why you might be looking for sellers to step in here. I understand we got a low volume area that was developed, so you'd look for a long off of that level. Yeah, I get that. Okay, I get those things fundamentally. I understand it. But there are probably a lot of other things that I was doing relative to the print where it was still a little foggy, a little hazy, and it's because you have a lot of information, significant amount of information. And I want to make sure you understand that has been and will continue to be my role and responsibility. As a trainer, I provide information. However, teaching is not learning. Just simply because I teach doesn't mean that you learn. And learning becomes a very personal thing, and people learn differently. Every single one of you is picking up things and being able to apply things differently, and I completely understand that. And it's incredibly important for us to understand where we are in this learning process, this teaching and learning process, because where we are going from here is transforming information into applicable knowledge. It is, now understand this word, our objective over the next 3 days. So the first 2 days has been my responsibility to provide you with information. And that is going to continue to be my responsibility to provide you with information, clarify your questions, and make sure that you have everything you need to transform information into knowledge. But where we are and where we are going is kind of a joint venture here in learning. And it now becomes our responsibility to take this information and transfer that into learning. want to be really clear about that. So I'll keep doing my job, my part. I will clarify. If I don't see a question and it scrolls off the chart and I don't get back to you, it's not because I don't want to answer your question. It's because I don't see it. Feel free to ask that question again in the text. I don't care if you have to ask it 5 times. In fact, you can say second attempt or something like that, third attempt, and I'll know that I'm just really blowing it and I need to get back to you. So this is where we are going, is together. How are we going to get there? Well, I would tell you that the first way we're going to get there is we're going to keep the fundamentals in front of us. And we're going to do that through repetition. So what you're going to hear me say over and over and over today, tomorrow, and Friday, hopefully not to the point where you want me just to shut up and you get it and I'm almost nagging at you, but to the point where it starts to become something more than information, and it starts to become something that you can apply. So we're going to keep hitting the target. We're going to keep hitting this thing. I'm going to keep talking about the fundamentals. I'm going to be talking about, like I did today, why is VPOC of yesterday my target? Why is that? Why am I looking for a long here? Why am I looking for a short here? Low volume areas, what does that tell us? Low volume areas are areas of non-interest, right? Brick walls, slingshots. So what am I looking for in the print? Why am I looking for a long here? Well, it's a low volume area. What is it in the print that I see? I'm going to keep going over those things over and over. We're going to do high repetition. We're going to keep the fundamentals in front of us. I'm going to show you that as I'm trading, how I keep my objectives and the fundamentals in front of me so that I can make sure that I'm trading using these fundamentals. Even if it means I miss a trade or if it means I get out of a trade that eventually works, I'm going to keep my fundamentals and my profit and my risk objectives in front of me at all times. We're also going to start moving away from presentations and into charts. So we may see a few slides tomorrow and Thursday, but in order for us to get there, to move information into knowledge, we need to get into the charts. And that's where a lot of questions are going to start coming. We're going to learn how to read the market for context. Very similar. What we're going to do is what I did this morning, is to say, okay, price came down. I've got this long-term low volume area sitting here, but the overnight VPOC is sitting here as well. In my experience, it means hands off, but it means one of two things. Price is going to move pretty quickly with price volatility, and that may mean price is going to move in a specific direction really hard and really fast, or it may mean that price is going to move high, low, high, low, high, low. Once we started seeing that certain levels like opening, swing high, holding, it was an opportunity, especially outside of the overnight range of that distribution. It was an opportunity for us to go long, especially when it lined up with that low volume area. But we're going to start talking through the context, and I'm going to talk through why I don't want to trade here, what I'm going to look for before I trade. So we're going to read for context. We're going to read the print for context. We're going to build our story, our market story, and keep that in front of us. So we're going to learn how to read, and then we're going to learn how to plan. So if this is our context, and we're going to use this thing called if-then. If-then helps to keep you objective. You read, you get context. My context this morning is that buyers are aggressive. Some very large participant came in and said, we're not moving lower. So before I even start thinking short, we would need to start revisiting that area and take out that participant. But we're going to use if-then. So one of my statements already is, if price comes back down towards that 1904, 1903 area, and sellers accomplish what they could not accomplish in the pre-market, coming through with momentum, and bring it over. If price comes back down here, and price starts coming through this level, and we leave a low volume area somewhere between this 1906.75 and 1903. We leave a low volume area in the print. Then I will look to take a short wherever that low volume area is. And of course, I'll manage my trade effectively. But that is my short scenario. So another scenario this morning that I would have, just based on the print, is overnight held up here at 18. I have a long-term low volume area at 17, which is right here. In fact, I'm going to do this. One of my trades setups, if-then statements to start the day would have been, I'm looking for short here in the 17 area, and if the print confirms it, then that's my short area. Print confirms it, that's my short area, and I will look to take that lower and take that short. So what I will continue to do throughout the day, and what we're going to learn to do, is based on what we read, right? We're going to learn to read. Based on what we read, in the context of what we're reading, we're going to build if-then statements. We're going to build if-then statements, which will become our trade plan prior to the day beginning, and we're going to build if-then statements along the way as the market is developing. Because the story in the RTH session may be completely different than it is in the overnight session. So we're going to read for context. We're going to learn how to plan both pre-market for the day based on context from yesterday and longer term information. And then we're going to learn how to use this if-then. Because what the if-then is going to allow you to do is to say, if this happens, then this is going to be my trade, and this is how I'm going to manage it. This is where my stop's going to be. This is what I'm going to manage it to. That's going to give you control. That's going to give you patience to wait for that if-then. The other thing it's going to do, it's going to help you take away bias. So even though the market is strong to the upside today, and buyers are having much more success at moving price than sellers, or let me put it this way, the activity at the offer is having more impact on price than activity at the bid. So if that changes, then I will look at a short. And the conditions of that changing are, first of all, price has to come through this level. And I want to see price come through this level, this low volume area, with momentum and a significant amount of volume. Then my expectation, I would look for a short and expect to take that back down, have a long-term low volume area at 675. Overnight VPOC was down here. I would look to scale out in front of that and then see where else this trade could go. But I have no short setup now until that happens. And this would have been my first short setup up here at 17. But even then, with that short setup, unless it broke through this 1075, once the print said that it was done at the bottom, I would have just closed the trade. I wouldn't have held it. I wouldn't let it come all the way back up, because my expectation is there's a high probability that it would come back up. So we're going to build if-then statements, because what I want to get you to the point is of using the print. I don't know why that's doing that. Using the print as your truth to drive your trading and your decision making, because the print is truth. And then we're going to learn to trade. So we're going to learn how to, in the next 2 days, 3 days now, read for context, how to plan out ahead of time, and how to dynamically plan for the day, because each day is its own day. Buyers and sellers have their own interests each day. You have to be thinking both short and long and know that price can do both. And if you have a day like today where you have an open drive, price is pushing higher, you have to create a scenario that says, here's my short and potential, and here's how I'm going to manage my short. Now we're going to trade. So the way that this looks is we start with the fundamentals, and we just pour information into you. And then through repetition, we learn how to read, how to plan, and how to take action. So we spent 2 days going through the fundamentals and principles. I'll spend the next 3 days repeating them over and over and over in the context of the auction and a trade. You're also going to practice them. You're going to think through them. And even you will begin to answer the questions as I start asking and start looking for trade opportunities and start trying to gain context of the market. I will be asking you, what is this telling us? What is this telling us? And you will begin to answer the questions. Doesn't matter if you're right or wrong. What I want to see you doing over the next 3 days is thinking through the process. I want to get you to the point where you see volume, you see acceptance. If you see volume through a low volume area and you see momentum, you see an opportunity for a trade on a pullback to that low volume area. So reading the market for context, remember the 2 questions. What is the market trying to do? How good of a job is it in doing it? We're going to be using structure charts. We're going to be using VCA and momentum analysis, and we're going to be using the volume profile to build the overall context of the market story. And we're going to be identifying tests versus moves. So what that means is the market will test. The market will test up. The market will test down. How do you know the difference between a test and a move? Well, you're expecting it. And the volume profile will confirm a move, a valid move, when it starts to gain acceptance and show you more trading at a certain level. So the market will begin to show you acceptance. Also, we're going to expect certain tests in the morning. Thin volume profile versus acceptance volume. So if price breaks into a new area or price opens up in the morning and we get this really fast move, and this is a good example today, we get this really fast move like we got today, and the volume profile shows, here's another good example of an unfinished auction. Here's where you potentially would look for a long right here around 1750 to 17. You would look for a long in the print. We got a little bit of a low volume area. We got volume building right above it. That's where you'd look for a long opportunity. Looks unfinished to the upside. And here's a little bit of a low volume area, so you'd want your stop below that. But that's what you would begin to manage to. And you couldn't do that until the print said weakness at the offer, strength at the bid, all the way down to this level, 16 quarter. This would be the first opportunity, but it could come down to 16 quarter. And I would be looking for, again, weakness at the bid, strength in the offer, and I would push the buy button. Especially if it came down here, 16 quarter, 16. So I'm going to go through and we're going to talk to the fact. Here's a good example. We got a lot of activity at the bid here, but look at the activity at the offer, non-existent. Does this mean sellers are running over buyers? No way. This is what liquidation of inventory looks like. When all this buying turns into selling, this is what the bar looks like. Strength here, weakness here. So now we've got our weakness into strength right at 17 quarter. Would have liked to have seen this a little bit different. There's still some risk that price may come down and revisit this area. But this there's still some risk that price may come back down here. What I would really rather see is weakness, and this is what causes me to have patience. And this is where I might miss a trade sometimes. I would look at this print and say, this is the level I want, 16.25, 16, and what I want to see, if the print comes back down here and shows weakness at the offer, strength back at the bid, then I'll go long. That scenario hasn't happened yet. And so price started going back up. I look at it, and this is what a lot of people do. I know it because the temptation is so strong for me every single time. The temptation is to chase this trade, to get into this trade long because it stopped right around the area that I'm looking for. That's fine, but my scenario hasn't occurred yet where I'm looking for, I really wanted to see weakness at 1650, 1625 with strength coming back into the bid at 1650. And again, like I said, does it mean that I miss trades? Yes, it means that I miss trades. But it also keeps me from taking a trade really late, and now it's coming against me. 1, 2, 3, 4, 5 ticks against me, 6 ticks against me. I'm getting nervous. I'm getting anxious. I'm losing money. There we go. Long. Now I'm long 1675. I'm not going to do this because I'm going to stop talking if I actually get into a trade. Long 1675. My stop is no further down than 1575, and I'm just managing the trade now. Now the thing I have to note is weakness, weakness, weakness at the offer. And what I need to see in this trade is I need to see strength starting to come back at the bid up at these levels. I have what looks to be an unfinished auction, but remember, look what happened here again. See how this one little volume node popped out and price started turning around? There's some evidence of sellers right there, holding. But I waited. This is the scenario that I wanted. That's my long, and now I'm just managing the trade. I don't want to see price come back down through 16 quarter, 16. Because VPOC is down here, and what is most likely going to happen if we start coming through 16, 1575 is we are going to see price at least tag 15 a quarter. And then I have to look at this and say, man, do I really want to hold a trade from 1675 to 15 quarter, 15 level? Do I really want to do that and give it that much room? No, that would be silly for me to do that. If I start seeing strength coming back down at the bid here, I can just simply get out or put my stop here at 1575 and get back into this trade. If in fact it tags VPOC, I get weakness at the bid, strength at the offer, I can get back into the trade. So again, I'm letting the print determine my actions. And what we can see is still continued strength at the bid. So this may continue further down. So that is what we're going to do. That is how we're going to work that. Thin volume, well, I was showing you this. As price came up, look at this thin volume. At a low volume area here of 1075 for the day, that's where we took that initial long. Thin volume, and then we started getting acceptance above here. Started getting acceptance. And what I want to get you to the point is when you start seeing this volume increasing and you start seeing that acceptance, you get much more comfortable in your trade and your long opportunity, and you start holding for your targets. Again, identifying test versus move. If we're looking for a specific test area, so for example, this morning I was looking for at least a test of VPOC, yesterday's VPOC. Could it go higher? Yes, it could. But I was looking for at least a test of VPOC, and we got that test. From that test level, the question then is what happens to price? And at that test, price came all the way back down towards that low volume area where we started the trade back at 1911. So if the move comes back and it leaves really thin volume, let's say this move higher, this test higher, and it comes back quickly and leaves very thin volume and starts building a distribution below, then that is evidence of just a test, and we can start looking at prices lower.